Hello everyone, welcome to Credexa. Today we are diving into a very important topic in finance, participants of capital market. So before moving on to the topic, let us first understand what exactly is capital market. The capital market is a place where long-term financial securities like shares and bonds are bought and sold. So if a company wants to raise money for a new project, they don't always take a bank loan. They can issue shares to the public, and in return people invest and become part of owner. So in simple words, capital market is equal to a big system where companies raise money and people invest money to earn return. Now, in this big system, there are many peoples or institutions involved. We call them capital market participants. Let's understand each one step by step with examples. Let's start with the issuers. These are companies or government that needs money. So they issue shares or bonds to raise funds. For example, Reliance Industries issues new shares to build a new factory. Indian government issues bonds to build highway. You can say issuers are the ones saying, hey, I need money. Will you invest in me? Now, who gives money to those issuers? Yes, investors. These are the peoples or institutions who buy those shares or bonds. There are two types of investors: retail investors, where normal people like you and me invest, and institutional investors, big organizations like mutual funds, LIC, etc. For example, you buy 10 shares of TCS, you become an investor. LIC invests 500 crores in government bonds, that's also an investor. Next up, speculators. These are like smart, fast moving traders. They don't invest for a long term. They just want quick profit from price changes. For example, a speculator might buy Infosys shares in the morning and sell them in the afternoon if the prices goes up. It's like flipping items on OLX. Buy cheap, sell higher, but with stocks. Now, what if you want to buy a share but no one is selling it? That's where market makers come in. They are always ready to buy and sell securities, so the market keeps running smoothly. For example, you sell your shares but no one is buying. A market maker steps in and buys them to avoid delay. Banks also play a big role in capital market. They help companies to raise funds, underwrite IPOs, and sometimes invest money themselves. For example, SBI helps a company to go public by managing their IPO. HDFC invests in government bonds for returns. The place where buying and selling happens is the stock exchange. In India, we have two major stock exchanges: NSE, that is National Stock Exchange, and BSE, that is Bombay Stock Exchange. You can think of a stock exchange as a supermarket for shares where buyers and sellers meet and everything is organized and regulated. Depositories. When you buy shares, they don't come as paper certificate anymore. They go into your demat account, just like your bank account holds money. The place where the shares are stored digitally is called a depository. In India, we have NSDL, that is National Securities Depository Limited, and CDSL, that is Central Depository Services Limited. They keep your investments safe, secured, and easy to access. Now comes a very important but invisible player: the clearing house. They make sure that every trade is completed properly. For example, if you buy 50 shares of Infosys, the clearing house makes sure you get them and the seller gets the money on time and accurately. In India, NSCCL and ICCL are the clearing houses. You can't directly go to the NSC and buy shares. You need a middleman. That's where brokers comes in. They help you place your order on the exchanges. For example, Zerodha, Grow, Angel One, ICICI Direct. They charge a small fee called brokerage for their services. Last but not least, dealers. They are different from brokers. Brokers help others trade, but dealers trade for themselves to earn profit. For example, a dealer buys 1,000 shares of Tata Steel today and sell them next week at a higher price to make profit. Let's quickly recap. Issuers raise money by issuing shares or bonds. Investors invest money to earn returns. Speculators trade for short-term profit. Market makers ensure smooth buying and selling. Banks help raise capital and invest. Stock exchanges provide platform for trading. Depositories hold your shares in demat form. Clearing houses settle trades securely. Brokers help you trade in stock market. Dealers trade on their own behalf. Each one of these plays a critical role in making the capital market function smoothly. I hope this video helped you understand who's who in the capital market. If you learned something new, don't forget to like, share and subscribe. Comment below and tell me which participant was totally new to you.